The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 6. You get the Nasdaq up 9. S&P's up 2. Gold contract up $1.80, trading at $12.66. You get silver down 4 cents, $16.02. They slammed gold and silver and copper yesterday. They slammed a lot of the commodities out here yesterday. Copper right now is up 3 pennies, $2.95 a pound. We get light sweet crude down 95 cents, $56.67 a barrel. Notes, 10-year note up 10 ticks, 124.21. 30-year bond up 22 at 154.13. They just refuse to die. They want higher price, lower yield. It's pretty amazing watching notes and bonds. It's just they just don't die.
Just keeps going.
Keeps going. King dollar. King dollar's up 187 ticks, trading at 93.190. The euro is at 118 to the U.S. dollar. The yen is trading out here at 112 and a quarter to the U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. Great program. You want to understand options upside down. You want to understand defined risk. You want to understand the futures. Bottom line, you got it all. If you happen to be on the West Coast right now, coming down, waking up in the morning, remember, just go right to your cell phone, TFNN.com, hit Tiger TV. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How we doing?
We're doing good. Well, you know, that NDX 100, man, it just couldn't hold price yesterday. Like we were talking, and the bottom line is that you talk about some volatility, man. We had a 120-point move again. Between up and down.
You know, we're getting, I think this is going to be a pretty interesting end to the trading year.
Yeah.
I think there's a lot of things going on that could throw some volatility into this market. Like, case in point, the Fed meeting. Not only the Fed meeting, but how do they guide going forward?
I know.
Out of the Fed meeting. Number two, how about tax reform and disappointment from tax reform? How is that going to work out? And then number three, and this might be the biggest one, Tom, I think this Bitcoin futures coming on Sunday night and Monday morning are going to throw some volatility into this market.
I agree, man. And
you could get days where this is up limit and down limit in a day.
And then what's going to happen, right?
And
That's
then
the
what's
interesting part of things, because it's not like a regular market where up limit and everything just stops. The exchanges are going to be the other exchanges, you know, the Coinbase,
So right now, folks, this is just pretty amazing. Bitcoin is trading $12,864. It's up $1,087.
It's just like bonds, up 1,000 every day, man. Every day.
I'll tell you, man. It's, you know, the cool thing, what I'm digging is that it's going to be on the CME. I mean, that's the real bottom line, you know. So we'll see. You know, I suspect they said that the margin's going to be like 30 to 32%, and you know, we can see there's a 10% move today. So
I'm almost smirking. Like, we'll see if that's enough after it keeps. I know.
That's enough.
You know, all I know is this. All the speculation and the move straight up and everything that you've seen, I mean, the chart on Bitcoin is frightening.
It is.
And how quickly it's gone up. All I know is Sunday night, I think everything changes.
I agree.
Now you got two-way order flow coming in.
Yep.
And you've got people's ability to go short this. So I'm really going to watch how this plays out. I mean, I'm not going to touch it because I don't think it's going to be liquid enough, frankly.
Right.
But and frankly, be honest with you, I'm having trouble trying to price this.
Yeah, there's going to be so many factors, right, Kevin? Just in terms of what you're talking about. It's like, is there going to be that type of liquidity? And if not, then what happens? You know, people are going to be able to push it around. And then if it does go limit, what does that necessarily mean? Because then the exchanges are going to, what if it goes limit and you have a position and you're watching it move against you in the other exchanges?
Yeah, I think this is going to be, like I said, I don't know of a time in my career that something has felt like the Wild Wild West coming on.
Yeah.
And that's
right.
what this really feels like. I don't think these exchanges really have a feel for the volatility that this is about to put into this market.
Yeah. And,
that's my concern.
Yeah, no, and that's, and the bottom line, folks, is that Kevin was down on that pit for a long period of time. And, one of our hosts here, Andy Hecht, also, he has the same concern, meaning that does that throw other exchanges into volatility because, is it a hedge fund trading it? Is a bank trading it? What can happen in the middle of that?
Sure.
Right.
So.
And that's all my concern. I want this to get to a liquid level where it's got two-way paper flowing in and out and price discovery, things like that. I don't think you're going to get that in the beginning.
Yeah, no.
So
and it's
I
so
think
tough.
this
It's
is
a
going to
brand.
be a bumpy ride.
There's nothing that's ever been like it before.
No.
Which is
Right.
what's interesting.
No.
Yes, it has value because people believe in blockchain.
Right.
They believe in cryptocurrencies in some capacity. There's never been anything like it though. And what's it worth? Nobody even knows. But that's the price it's at right now. Doesn't mean it's going to be what it's at Sunday night.
No, it doesn't.
No.
It doesn't at all. And if we go to the tax bill for a second, what I thought was intriguing here this morning is that they had in the Journal this morning, this is going to be, what happens, folks, is that when you buy equities, you have a choice of what you want to sell, meaning, and then the new tax bill, what they put in there is that it's first in, first out.
Okay.
So let's say you bought Apple, right? You bought Apple 10 years ago, right? Then you bought Apple 5 years ago, right? You have the choice. If you want to make less money.
Currently, you have the choice.
Currently, you have the choice. Well, in the tax bill, you're not going to have the choice.
Okay.
So I think what you just brought up, Kevin, about coming to the end of the year, I wonder how many other things are in that tax bill that we're all just going to start learning. Like, is that going to accelerate selling or stop selling?
Sure.
Because that was like, hold it,
Yeah, because if you want to take advantage of the LIFO, which is last in, first out, right?
Exactly.
Maybe you have to do it before the year end because maybe everything changes.
It changes January 1st.
Yeah.
It changes January 1st, So that's going to keep the volatility going, I suspect. And it's amazing. There's no doubt. This is the, what is it? This is the fourth day that we may have some volatility, and we haven't had that in years, right?
Right.
That's what it seems
Right.
like,
And still, 1122 on the VIX
Right.
is a low number. So I'm really looking for. It just feels to me like there's going to be some volatility starting to creep in this market at the end of the year.
Yeah, no, I agree.
I agree totally.
Hey, Kevin, did you see? This is a crazy story. We had talked about this. I don't know, maybe 2 or 3 months ago. The big elephant in the option market that bought all the VIX options,
Sure.
right?
Yes.
Sure.
Well, it had one of them. The roll was last Friday, and what happened? She, know what it was. They were down 20 million, right? And guess what? Because of the volatility on Friday, that trade was only down 2, and he rolled them out again, whoever it was. Isn't that wild?
Really?
Yeah. That's like.
They're looking for that one good spike to like 25, right? So,
Right.
Yeah.
like that's,
They rolled them
And if
right out again.
If you can stay somewhere near even, keep going along, that's not bad because I think
Oh.
at some point we'll get it if you can just stay in the game and not lose much and have an
you know
active
what?
position.
Right what Tommy just said, folks. 45 minutes from now, okay? You talk about staying in the game. You talk about great strategies. 11 o'clock, Thinkorswim,
We'll
TD
be listening.
Ameritrade. It's a beautiful thing. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me, guys.
Thanks, Kevin.
Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 24. Get the Nasdaq up 2. S&P's are flat. Let's go to our man Carlos. Carlos, what's going on?
Hey, hi. How are you guys?
Morning, Carlos.
I'm doing great, man. How you doing?
I'm doing very well, thank you, Tom. Much better than last few months.
That's great news, man. That's great news.
And now I'm residing in Texas.
Oh.
And I've been back and forth in Puerto Vallarta too. So I'm no longer living in California.
That is awesome, man. Well, everyone in the den is all excited, man. It's so good to hear from you, man. No doubt.
I'm glad you called. Totally.
Yeah.
No, thank you very much. I'm so glad I've been able to get in touch. This is my second time since the last time I spoke to you guys.
Yeah.
And I can say I'm doing very, very well. There's help in the health system in Mexico, very well and inexpensive for this type of treatment. So it's really, really helping.
That is
my
awesome.
pocket and my health. Yes.
Well, we are so happy, man. You know, I'm sure you're happy.
Nothing more important than your health.
Oh,
so that's just amazing.
Yes.
That's great to hear.
And like always, Tom, I'm calling regarding platinum because I heard what you were talking yesterday to Andy Hecht.
Yeah.
I think for me it's a nice place to put a half of my position, and I'm using the 4-hour chart.
Okay.
And there's a low that it was made on October, where I played that low last time and I did very well. So now I'm trying to put my feet on the water and put half of my position where I think I have a chance to make some money. What do you think?
So I have the January contract up. We're down 1170, 905. So I see the one you're talking about. The 906.50 is the low there in October. And then what is pretty cool is that the low in July, well, the high of the low was 906.70. The low's 895. If 906, I mean, 895 is game, just so you know. I mean, it really is, just because like the October low, I mean, that was a nice spike down. It rejected it. But now that you're into 906, we're only in it by 30 cents, but that could get into that low. I mean, if you can handle the heat to 8.95, well, that's $10. That's a lot of money.
This is what I'm doing. I'm placing my stop below the 900.
Okay.
And I'm planning, if this doesn't hold, I'm planning on go back around the lows that
okay.
I could see in 891. But I want to see first that hold that low. But at this point, we're going to have the meeting in 1 week. And if we can get some short covering before the meeting,
yep.
I'm planning on selling that and trying to buy this. Usually there's a strong move in that day. So I'm planning on buying that again and placing the entire position that I'm planning on it.
Yep.
But definitely I'm trying to see if I can get some short covering in the next few days.
Yeah, no,
or
I just...
out of the way.
Yeah, and Carlos, I just put this up on an intraday chart, and what you'd really love to see, you see the first spike down at with 920 had volume, had 1,400 contracts, right? And it'd be beautiful if you could get that test right now.
And this is on 10-minute chart.
Yeah, because that would basically say, hey, we got a rejection of price here. So as you go through to the day out here, if you got a rejection and the volume was lighter, then you really got some action, man.
Yeah.
Because because the other side of that, it's like, okay, see that 916 up there? I mean, if you get a rejection, you're going to be at 916 pretty quick.
And that's just yesterday.
Yeah, right.
Yes. One more thing, Tom. I've been able to listen to the program.
Yes.
And the program every day is so good. It gets me going really. It's energy all over the place. Every host, every person who calls, especially, I love to hear Mr. C. He makes his comments, and I really appreciate everybody. And I'll be back very really soon. And I want to say to Tommy that every day he's doing way much better. I really appreciate the good work he's doing.
Well, your calls give us energy too, Carlos, man, for sure.
It's a big deal.
I really mean that.
I got to read some of the comments in the dent here, right? So listen to that. This is we got Marie, and she lives in New York now, but it's Dudette from the UK. This is a good day. Carlos is back. Dano's been missing that guy. And of course all the white lighter out there, man. It's
a family. It is.
It's
a great family, and then keep it up. And I'm not going to take more of your time, but if I don't call back, I wish everybody a nice Christmas and
Merry Christmas. No doubt, man.
Take care.
Yeah.
Take care.
Well, call back because we miss you. We were
totally
worried, basically.
We love to see that name pop up.
Even if you just call back and say hi, we want to know.
Seriously.
Okay, man.
Thank you so much. Take
Thanks,
care.
Carlos.
Okay.
Bye.
Have a great one, man. Have a safe one.
Yeah, I love it. That's awesome.
Oh, it's huge, man. It's absolutely huge. There's no doubt. Hey, the bottom line, folks, is that, I do that. Yesterday's gone. Tomorrow's not here. What are you doing right now? This whole life thing is a mystery, man.
You got to do it. I hear you.
Mystery to be lived, not a problem to be solved, right?
Very true.
Okay.
There we go.
I like it, man.
Totally.
Okay.
So here's, you know what? We got oil.
Oh.
As we jump around.
Okay, oil.
So it's Wednesday. We'll pull it up.
Prince Spaghetti Day.
We got 5 minutes until those EIA numbers. We got a lifetime. That's plenty.
Yeah, that is plenty.
11 a.m. we'll start off with 56.74. Currently we're trading at.
Okay.
And I'm in the binaries. I'm going to back it out and go into the spreads. Crude oil. We'll see with the 11 a.m.s. So it looks like $57 we could use as a price point in the 11 a.m. So it'd be about 25 cents off. Let's see where the 12s line up. 12s line up with 56.50. So that's where you could, if you do the 12 o'clock, you'd have about 25 cents of intrinsic value to the upside, right? Because you'd have 56.50, so your bullish position would have about 25 cents of value. Whereas maybe if you wanted to do the 11 a.m.s, That's where you'd have actually the value to the negative side, because your $57 one to the negative side would be 25 cents. Let's just see if any of them line up. 56.75. No, they're not going to line up right to the peg for us. So let's just take a peek at what maybe if we were a little bit. This is going to be a bearish trade. So here's our bullish trade. Now it's going to be basically completely out of the money. That's why you'd be getting into this just premium $7. But the bearish one is going to have your 25 cents of value plus a little premium. So you're looking at $38 or 38 cents.
Okay.
But keeping in mind, you have 25 cents of value in there.
Right.
So that's a bearish trade.
Okay.
Interesting, but 56.75. We'll see what happens when we come back with that news. And who do we have coming up after the break?
We're gonna ride the wave, baby.
That's right.
Got our man, Mr. Basil Chapman, coming up. Dow right now, down 27. Nasdaq is up 6. S&P's are flat. Tommy and I come right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks.
So, right into these crude oil inventories. With inventories falling 5.61 million barrels, you have gas inventories rising 6.78 million barrels. We'll get the estimates in a few seconds, but let's jump over and see what really matters, and that is the price. And so a little bit of a bounce. We're trading 56.75, recall. So trading up about 20 cents as we speak. We'll see where that goes. But we saw a little bit of a decline, and maybe the estimate wasn't as big as they thought. So the API was pretty in line with actuals for gasoline and crude. Let's see. Also noted, Bloomberg users are a lot less bullish than the API. The terminal survey shows an expected stockpile draw of 1.55, and the API had 5.48, but Bloomberg users still were saying they maybe just a 1.5, and it came in at 5.6. So maybe that's a little bit of the reason for some price appreciation. But again, 20-cent movement. Not too much action.
No. And it's good. It's good we didn't do it because of the bearish connotation.
Yeah, that one for sure, because it's going right to our max loss.
Let's go over to our man, Mr. Basil Chapman, and don't forget, folks, Basil's not only got a great show here every trading day, noon to 1 Eastern Standard Time, but this Friday we got a big action. He's going to be doing the Master Trader Series. Live. It's going to be starting at 9 o'clock in the morning, going to 4:30 in the afternoon. Basil Chapman, what's going on?
Hi, Tom and Tommy. How are you guys?
Good morning, Basil.
We're doing good. How you doing?
Very good, thank you.
Is it how is the weather in Boston? I hear there's a cold spell creeping in.
Is it?
It's creeping in. It's still not bad. We still haven't got snow on the ground.
Good.
Hey,
I heard
you can delay snow as far as I'm concerned. That's good.
Every day you push it off, right? You're closer to spring. I heard New York may get some snow, and whenever New York's possible, Boston's possible, or
sure
at least.
Is.
So
that's right.
That's Bloomberg was talking about it. Their New York studios, and it's I guess. Hey, every day, like you say, we'll see where it goes. So, Basil, on Friday morning, 9 o'clock in the morning, talk to us about what you're going to have going on for that full day of education.
So, there are a couple of things that I'm going to be doing, and this is really a very good time because it's going to give us at least a sense of what happens in the market over the coming few days. Going into Friday is going to be very important. And one of the things that I always look for, let me just show this particular slide right here. Basically, in the Chapman wave, what we look for is the lowest, most identifiable trough. That's the little V-shaped bottom. And then we count each successively higher peak until we get to the fourth highest peak, alphabetize them, peak A, peak B, peak C, peak D. At D, other things can happen. That is really the core of the Chapman wave methodology. So with that said, we're going to be looking at the cup formation or the V-shaped formation. That's where it goes from the left side high, pulls back, and then comes back again. We're going to be looking to see how can you measure it, because time is as important as price in the stock market. So if there are a certain number of bars to the downside, will it take the same number of bars to get back to that level? That's what we'll be studying. It's the same thing in the arch or the inverted V shape and the straight line move. So basically, there are three particular patterns that we look at. One is the cup, the other is the arch, and the other is a straight line. And those three moves really make up most of what we see in the market. It depends, of course, on time frames, but that's what we're going to be discussing as well. So that's part of this left side, right side price time match. We're going to look at how you can use the cup formation and the V-shape formation to get what I call an inside wedge target line, and that gives you both the time and the price with the resistance levels as it goes up. Then, of course, we look at time frames. So what's really important here, I've just mentioned how important the peak D is, but look, when you get to a pattern, let me just go right here. This is, what we're looking at here is gold core. This is part of my webinar that I started preparing weeks ago, and I had this pattern that I call the rogue wave. Sometimes you get a peak D. There's that D. In gold core back in September, there was a peak D, pulled back very sharply from about the 1420 level to 1256, and then it had a bounce. And then it had what's called an inside buy, and it went to a peak D on the fourth highest peak on the 10th of October. Pulls back, and then it has this sudden spike. If you were looking at the technicals, you'd say, oh, yeah, this is a short for sure. And then there's this one move that goes above the previous high, gets the previous bulls back in again, gets the bears saying, oh, I've got to cover, and then it holds just long enough to get everybody confused, and then it pulls back and then goes on its merry way to the downside. The reason why I had this is that one of the patterns we look at is this arch formation. I'm bringing this up because that's the pattern I think is going to be prevalent over the many weeks to come. That's going to be a pattern we're going to focus on for the people that are attending the webinar. Now, look what happened. You've got gold core. It tests the left side low of 1256, goes to 1260, and then goes below it, and then bounces, and now it's even lower. There's that arch formation. So in my CD, which the attendees will get as part of what we're looking at, I have a whole chapter out of my 20-something chapters on the H pattern, how if it fails, it can keep coming down. Eventually, it can even start to make larger shapes that go from a lowercase h to a lowercase m. What's really fascinating, why this is so timely, this particular webinar, is, look, you were speaking about Bitcoin. So Bitcoin, I'm going to GBTC, and that's the only way I can do it. This is Bitcoin, and this one only trades between the market hours, 9:30 to 4 o'clock. Those other hours, 4 o'clock to 9:30 the next day, a myriad of things can happen. But this is great because, look, it made a leg D. It could be a peak D at 19:05.55. We've been watching this closely. The weekly chart is in an E/C. This is an alternate wave, but the monthly is in a leg F. So no matter what we look at, this is extremely extended. So that's, now this is a little bit of a warning for Bitcoin. We don't have a position on it. I have spoken about it for subscribers, and I did that in a webinar I gave about 2 weeks ago. Look, this SMH is the semiconductor index, a peak D. Look at that sharp reversal. Look at the arch formation. Look at these left side, right side price time matches. And now the stochastic, which I'll be teaching about in the MACD, are extremely, extremely poor. So this is live action. This is not going back to a chart and being 100% correct because you're saying, oh, look, it made a D and now it's come down. This is live. We're going to be doing it. So
what is the Dow in?
And look, this is also very interesting. The Dow, we waited and waited all last week, went to a peak C, and I spoke to you and I said, I'm expecting a D.
Look at that.
And we got that D at 24,534. Very ugly candle the day of that on Monday. Ugly candle yesterday. And today we made a lower low. This is a warning, so subscribers know exactly what we're doing. I said at 10 past 10 this morning, if such and such happens, we're going to start a short position. And so these are all things that we're looking at. So what's really important about this particular phase is, look, SPX.X, the S&P, peak D. You remember I spoke to you, Tom, yesterday. We were looking at, and I spoke about how important I'm going to teach very simple techniques, how you can draw trend lines. Here's the S&P. It went up to the green line. This is what's called in the up channel. This is called the
Benzo, can you come back after the break for a few minutes? We'll just finish this up, okay? We'll go to the break. Okay, we'll come right back.
Stay right there, folks. Basil, Tommy, and I coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Talking with our man, Mr. Basil Chapman. We are talking the Master Trader Series this coming Friday. And, you know, interesting, Basil, that's why I was asking you about the Dow, what it was in. Because just the, you know, the 50-day moving average is down 1,000 points in the Dow, you know, because it's gone up so dramatically. Do you know what I'm saying?
That chart, put them on there. It's an interesting chart when you look at all the moving averages, like any market right now, Basil. Of course, you know, and we almost jokingly put up the moving averages on Bitcoin. Just for reference, the 50-day moving average on Bitcoin's under 7,000. It's almost at 13,000. But it is interesting when you look at it, because eventually those lines have to converge, whether the moving averages come up to meet the index or the index comes back down.
Just looking at it by eye, because I do not get that contract. If you do a trend line from the tops, it's just broke exactly like the S&P, just broke slightly above the top of the trend line. And at this particular point, it tells you very clearly these are the lines you got to watch for, because if it starts to trade under that trend line for maybe 3 or 4 bars, it says, whoops, that's your resistance. It's just, you know what's so beautiful about using these very simple techniques, and that's the whole idea of what we're going to be doing. I'm going to be showing what I call the naked chart, and then we're going to start building things upon it. But what you can see in the blank chart is really as important as putting all these lines together. What I like to do very often is take everything off and just do the blank chart. We did that yesterday with a particular chart, and I showed you how you can add these particular lines. But even now, using this, you can draw a trend line right here in the S&P from that low that was made right there at, what was that price? That was on the first, that was on Friday, and the low is 26.05. Now you've got a trend line that's rising, and it says at any point if the S&P starts to trade below 26.20, it's at 26.26 right now, then you've got to be careful, because these lines act as magnets. So as soon as it starts to trade below, that becomes resistance, and the next major line, this green line, will become support. So it's it gives you, you know, it's the signpost as you're on the highway. It says 3 miles to the next turnoff, and just gives you a warning, a heads up. And that's really what I like to do. It's the same as you look at gaps. You know, we've got tons of gaps. We'll talk about that and in the webinar. And what's fascinating is that this is a perfect time. As you're wrapping up the year, we're looking at what's going to be for the next coming months, weeks even. I'm looking at chart formations that I suspect. I mean, look at this incredible move in the monthly chart of the S&P. I wouldn't be surprised if we're getting to some kind of resistance. It doesn't say you have to smash to the downside. It does say, hey, now you can get at least a choppy sideways move, perhaps lower highs, lower lows, and then you'll deal with it. If that MACD crosses very negatively, then the daily chart says, uh-oh, now you've got to be careful. All of those things that we're going to be
explaining. No matter what, time
has
taught us the market cannot go up 15% on a yearly basis and just continue. I mean, it's and I'm even being light in terms of how amazing this move has been since 2008, really.
Oh, there's no doubt.
And in the last year, especially, to ramp up at the end. history books will have lessons on this market, and we'll see where it shakes out. But it is quite a run for sure.
And yet, even with this all, look, here's the black line. Look how today already the S&P held the 9-period exponential moving average support of 26.25. So it's nice to have these tools. That's really what it's all about, is teaching techniques, is giving you the tools from which you can make your own decisions. So that's really important.
And folks, you just come over to our website at TFNN, and you're not only going to get a great day of education, you're going to get his CD book, as well as his newsletter for a full month. So
it's awesome. And what did I see? I just saw, Basil, 456 slides, I think it was. I was saying yesterday it might be 250. I think that book is somewhere in the 400s.
I always have to check to see.
476.
Yeah, 476.
No, and I've been through Basil's book. That's worth the price itself. It seriously is. Well, I'll be in there, Basil. I'll be one of your students on Friday, so I look forward to it, man.
Looking forward to it myself. Thank you very much.
Awesome. Okay, man. Have a great one. Have a safe one.
See you later.
And it works out. What a market, too, right? In terms of when Basil was saying he wanted to put this together, and it's like there's time through December, but you just always worry with, you get near the holiday season and trading might trail off. We might get a calm market. And Basil, of course, we were putting this together, a month ago where he was really already talking about what he wants to do, looking forward to it. And you didn't know this was going to be happening in the market, where we'll finally be getting some action, which is nice. Because Friday, he wanted to do it when the day was open. That way you're going through the market. And I was just hoping, Friday in December, late, just that it would... Yeah.
Last Friday.
Yeah, right? Seriously. That would have been. Maybe we'll get some tweets, some tweets on Friday to add some peaks.
No, totally. And what you're going to get, too, is that you're going to get, little by little, it's going to be coming out what's actually in the tax bill.
Oh. So I just saw there was an article in Politico just talking about people talking about this stuff everywhere. And it's, you have a 500-page bill. And it's really difficult for even smart people. This isn't saying like, oh, the dumb politicians. Like, you can create loopholes that lawyers, like very well-paid tax accountants, can slide through. And it's like, so you really have to have a group of people that look through it and say, oh, this one word created a loophole that's going to allow for unintended consequences, sometimes good, sometimes bad. Where you basically the goal of a passage can be to do one thing, and you just worded it incorrectly. That's what I'm reading about. Very general, but that's what, it doesn't take a genius to figure out that's possible.
Let me tell you something. What's going to be shocking is that for the tech companies is that if they don't take out that... the
AMT for corporate with research and development. And I think they'll have to. But what happens is that they now have to change the bill that they voted on for that. This becomes a different problem in that type of deal.
That's intense.
Yeah, it's not that was not supposed to be the goal, I think. And we're all fighting through to figure out what's going on. But excuse me, they have to go to conference, I think, instead of just amending it. There's different things that have to happen. That AMT needing to be changed is not good for the general agreement between the House and the Senate. It's a larger hurdle. And we'll dig into more of that because it is.
It's going to be a trip because specifically what happens with that, folks, is that it won't allow. See, the tech companies put so much money into research, and it won't allow them to write it off immediately.
So they're lowering the corporate tax rate to 20%.
Right.
Then what they wanted to prevent, though, was that corporations from really going under the 20, right? Because you're at 20 and then you're using all these deductions where then you get, so maybe they pulled the AMT out, but then they put it back in, but really what they should have done is put it back in at like 10 or 15%. And again, I'm just choosing numbers. The goal was to make sure they didn't get too low, but they put it back at 20. So that means deductions are nothing. They set the rate at 20 and then said, let's just make sure everybody doesn't go below 20 though. And it's like, well, then deductions are meaningless. Like, really, the AMT is supposed to be lower than the established rate because it's the alternative minimum tax. You don't set the minimum tax at the rate. Does that make sense? I mean, it's pretty staggering. So the AMT is usually supposed to be lower than the standard rate. Like, what is I forget, I don't know what the AMT is for personal, but, it's not 39% where that's the high earner rate. It's a lower rate. So, it's the minimum. It's the alternative minimum rate to make sure, for instance, the best description, Trump, he paid because he could have hid not hid, covered in deductions his entire, so you have the AMT, which is like a 12% or something like that. So the point is, it's not at the rate. It's always lower than the rate to make sure that your deductions don't go to zero. We can finish it afterwards.
Yeah.
Does that make sense? Okay.
Stay right there, folks. Tommy and I come right back. Dow Industrials are up 2, Nasdaq is up 3, S&Ps are up 1. Come right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. And as we're talking...
What's going on there? Computers just jumped all around. Let's get back up. Something to go, though. Okay, Dow's up 12, S&P's negative 3, and Nasdaq's positive 2. Let's jump into the crude oil contract before we jump back to that AMT conversation real quick. Crude right back to kind of where we were, right? 56.78, 3 pennies away. If we had made this trade that was going to be the bearish one, here's our bearish position, which would have all the value. And you still have about that 25, 22 cents of value there. Okay, so AMT, just real quick, we were talking about it during the break. So here's literally just Googling it. Gotta love Wikipedia. Quick plug for them, they are awesome. So since the marginal rate of a person's $1 million of income is 39.6, that could change by the year end. And the AMT used a 26 or 28% rate on all income. And this is just it's unlikely that millionaires would get tripped up by the AMT as their effective tax rate's already higher, being the 39.6. But guess what? That doesn't count deductions, right? This is a very simple. And so the point that I was making is that in the new tax law for the corporate side. It's going to be 20%. It's going to be the corporate rate.
Yep.
And then they set the AMT at 20%. So when you think about it, you can still have deductions, but if we're a company, TFNN, we're going to get taxed at 20%.
Right.
We have deductions. We come to our accountant at the end of the year, we say, okay, here's our 20%, but deduct all this research we did, development of the studios. Right. And he says, okay, that's great. Those deductions are on the books. You can use them. But then the AMT kicks you right back up to 20.
And that's heavy, man.
It is.
That means because those are legitimate deals. Yeah,
it's just it's a mistake. I mean, that's because it makes, it would be the same as if you had the AMT at 39.6%, as in deductions are then meaningless on a grand scale.
Right.
So they'll square that somehow, but like we're saying, it becomes a procedural question. Lots happening for the end of the year, man.
Big time. You stay right there, folks. We get swim lessons coming up next. And, of course, now I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Have a great one. Have a safe one. Thanks, man. Wow! Go get them, folks.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com.